Righto, g'day Money Miners, end of the week. Love the end of the week. Hope everyone enjoyed part 1 with Sammy Berridge, and just because we love yous, we're going to let yous listen to part 2. The kind of people we are. Now, part 2 is where we are. As we said, part 1, big macro. Part 2, stocks and
Just
more stocks. It's bloody good, mate. We go on the lithium billionaires, what Sammy thinks they're up to, why Genesis and Pilbara are the most shorted stocks on the ASX. Ora Banda. I wanted him to explain to me the Ora Banda story.
Yes.
One of his biggest holdings.
Explain, defend, whichever one you want to look
When
at.
you asked that question, did you know that he'd been a big Ora Banda shareholder for a long time?
No. I would have asked it anyway. I still would have asked it because I want a bloody explanation.
Yeah, well done.
So
That was a good answer.
Leonora consolidation, what he thinks Silver Lake's game plan is. What are they up to?
Yep.
Will they do that Christmas Eve takeover offer? Paladin versus the SPUT Physical Uranium Trust. That was a good chat.
Yeah.
And a bloody ripping and allowably extended overrated, underrated.
Yeah.
It was sentences instead of words, but his sentences were bloody good.
They were. It was an acceptable, elaborated edition of overrated, underrated. Well done, Sammy.
Bloody love it. Now, all these, he has got a bit of an underground mining fate, like between Genesis, Ora Banda, a lot of underground mining. Resonates with me.
It does.
The thing about underground mining, boys,
What's that?
you can't walk down there without some ground support in the backs. And you know who the household name for ground support is? DSI Underground.
There you go.
It's like, I would say DSI are like Band-Aid. It's just
right.
like if you want to fix a wound, you get a Band-Aid. It's the generic name. That's what DSI are for the ground support industry.
I think you need a better analogy because like a Band-Aid gets wet and it falls off. But their mesh and bolts, mate, they're
Stays forever.
It's like a permanent Band-Aid.
Yeah, it'd be like chucking bloody like that horse tape, like heavy duty shit. Heavy duty. Leading supplier for the underground mining and tunnelling industry. 3, as we can see here, mate, manufacturing facility. We've got to go get that split sets and stuff from Kewdale to stack on our wall. They're in Kewdale, they're in Brisbane, they're in Newcastle. Mate.
Kalgoorlie as well, I think.
Oh, but the actual manufacturing facilities,
gotcha.
but they got they bloody have depots, distributions, bloody everywhere. Look on the map.
Yeah, the service and mines everywhere, right?
Just everywhere, JD. It's bloody everywhere. Anywhere there's a hole in the ground, there's probably a DSI bolt jammed into the rock. Right, so we talked split sets and gooey bolts and Posimix bolts and resin and stuff last week. Here's that resin I was telling you about, the bloody smell. It doesn't smell too bad when it's covered like that. It's when they pop open, they go to shit.
That's not what I pictured.
Yeah, so and now here you can see that's the Posimix bolt right there, the big Rio bar, and there's a hole drilled and that glue has been jammed up the hole. So then you put that up there, then you spin the bolt in and that's what mixes the resin and that's the load transfer mechanism to the ground. That's one in action. So there we go. Right now,
It's impressive, mate.
It is. Now, it'd be rude not to share a bit of jumbo porn. Procured from an operator. I think this operator knows what he's doing, actually. Check this out, boys. Here's some split set installation in action.
Is this you?
Time in motion. No, because I wasn't allowed to take videos underground.
Gosh.
Then flicker back over, load another one on. How bloody good is it? Time in motion. You got to get the boom drilling before you jam the bolt in. You're wasting time. You got 2 booms. You want to be bloody using them all at all times, boys.
Can I just say, Matty, if you didn't know a jumbo was a piece of underground equipment, the word jumbo porn would be completely inappropriate.
Jumbo, it would be. Anyway, like we do a mining podcast. Right, now, today, boys, I want to talk about MD and MDX bolts. Now, it's pretty much ground support on steroids. So think of a split set, think of a gooey bolt, put the gooey bolt inside the split set, you get one of these things. That's the MDX bolt, the Samvic MDX bolt, but it's now goes through DSI, so you don't have to chuck a separate Samvic order in, all through DSI, one-stop shop, one invoice, piece of piss. So that's for,
efficiency.
it's for like all the seismic areas, like there's a dynamic version. So if the ground moves and goes, it goes with it. So that's that is the go these days. Look at the forearms on this underground miner. Because they've got a bit of weight about them, so bloody jamming them on every day. Look at I've missed mine actually.
Is that a nipper?
That might be the jumbo operator or the nipper. But if it is the nipper and this happens, he'd be getting the shits. This is an example where it's taken a few goes to get the one MDX bolt in. And so, the nipper gets the shits because you've got to load the same bolt on numerous times just to get that one done. But you know who it's good for?
Who?
DSI. Because once you chew through the bolts, you just chuck another DSI order in, boys, and it's all good. They're still everyone out there, they're still making bolts every day. Just chuck another DSI order. Just don't think twice about them. So, and look, here's the game changer. Now, here's another intricacy about the jumbo boys. When you're doing MDX bolts, you can't. When you put your next sheet of mesh up, you usually have to replace it. Put another MDX bolt. And like you double bolt the same area to hang your next bit of mesh. You don't have stubby bolts like you do with split sets. But look at this, the meshing clamp. So you can chuck that on the end of your dolly, pick the sheet up, and then that clamp goes on an old MDX bolt, as you can see here, so you don't have to double bolt. So you can save up to 7 bolts per heading. So, mate,
DSI do it all.
That's
hey?
what DSI is about. Like, they're pretty much providing something to save the customer money. Good for them if they use 2 bolts. That's not what the company are about. They're thinking about the consumer. They're thinking about the clients. Good values. I like it. I wish I used these bloody things. Well, it's easier for me just to chuck a bolt on, but I'm not paying for it, so it doesn't really matter.
Next time, Matty.
Next time. So thanks, DSI, for coming on board.
Thank you very much.
Cheers, DSI.
Love your work.
Matty, I was reading The Australian like literally 3 days ago. And
Legacy media.
I don't know why I was doing it. I regret it. I lost a few brain cells. But I did notice one interesting article in the process.
Let me guess who's made their way back into the papers this week.
One man that gives you confidence when you look at them.
Well, you've brought the photo up here. That's a bit of a different pose to the other week. It's like a bit of, yeah, I know what I'm doing. Like that's the feel I'm getting. Bondi's in the paper this week. He's bullish on commodity stocks in uranium. You'd hope so. He does run a natural resources fund with Langers. And, mate, tell you, he's looking sharp.
Yeah.
Always looking sharp. But he will appear as a stock picker at the prestigious Son and Hearts Mine Investment Conference, Sydney Opera House, November 17. So, look, if you want to do yourself a favour in life, go say hello to Bondi. Mate, and make sure you get a big, massive group of yous and go up all at once.
And just say, you give me confidence.
If we can get some people with some signs out the front, we love Bondi or something like that, if we can get a bit of like a positive protest in a way. The cops will be there and everything.
I'm sure he'll love it.
I'm sure, yeah. Please get that together. So, look, I guess we harp on about Terra Capital. They are a natural resources fund, but you know why they're special to me, boys, and special to us? From the early days of Money of Mine, they got in touch, and from then on they've been either come on for interviews, they've helped us grow our network, they've always offering good business advice, resource advice, and it's people like that in the industry that
and
have
let us
made
talk whatever the hell we want.
Exactly.
Like no input on our content.
And believe in what we do. They've flicked us a bit of sponsorship, and it's organisations like this and many others that have helped us, that have helped Money of Mine become what it is. So I don't want to tear up or anything, but look, we cannot thank them enough. It's a testament to the blokes they are, and DK as well for coming on for the rare earths. So bloody mate, we'll be doing it for free next year for them. We love them that much, but we really appreciate everything that people like Terra and all the other mobs have done to rocket the show to where it is now.
We sure do, mate.
Yeah, love it. Thanks again, Terra Capital.
And we've got one more special thing to reveal before we get into the interview.
I was thinking, is JD taking the sponsorship too far again? What's the go, mate?
Well, Trav put a little riddle toward us a got about a week ago now, and I think he completely forgot to reveal the answer personally, but he's been reminded.
I did. The riddle was the answer was Luna. Everyone in the comments got that one right. Well done. I think the thing that threw people off maybe was like what are the 3 projects that came about from the assets that they kind of disposed over the way. Yeah. So they did like a farm out of some of their ground to Creasy Group. This was when it was Apex Minerals, and that ultimately became Nova. Sorry, to Sirius, and that ultimately became Nova, the Nova discovery. So that's one. Another one was they sold Galena, and that obviously, well, there's the Abra project, and that's Galena, and that's a mine now. And the other one was the Salt Lake, the brine rights to the SO4, and that became a mine. So 3 mines there in the last 10 years from those projects.
Became a mine.
1 out of 3 good ones.
It's a loose term.
Yeah.
Well,
1.5.
So they got 66% correct.
On that note, lads, should we share our
Let's
part
rip
2?
in part 2
Sam
with
Berridge.
Sammy Berridge from Perennial. Let's go.
Well, on that point, let's have a yarn about the battle of the billionaires in WA lithium. I think it's like I said to the boys this morning, like this is like the M&A story of the decade in a lot of ways. Like, you know,
what a time to start a bloody mining news podcast.
We thought the battle for Leonora was interesting enough. Like this is mental. Like big personalities, billionaires, and they're like fighting it out. Like we've talked about it ad hoc, I don't need to rehash it here, but what do you make of the strategy of Gina and Chris to kind of disrupt deals by blocking stags across WA's hard rock lithium assets?
My understanding...
How long you got?
I think my big picture understanding about what, at least what Chris is up to. Gina's a bit harder to pick, I think, because she's keeps very much to herself, but my understanding is that the view, within those entities is that the production side or the production forecasts for lithium out in time are just not going to be met. So a lot of these brine projects, some of these direct lithium extraction projects, some of these more conceptual projects, which a lot of brokers and consultants had built into the supply side of their model, just simply aren't going to happen. Whereas, spodumene in Western Australia, it's a permitting, security of tenure and all that, and path to export are all reasonably well assured. That's where more supply is likely to come from, and certainly is lower risk. So I think that's their thinking, and because that the supply for some of these, more eccentric projects, let's say, is likely to disappoint. So they're happy to bid some of these exploration discoveries up and secure more supply for their plants they've got littered around the place.
And do you think like the strategy of just buying minority interests without necessarily having a view to get 100% control, like what do you make of that strategy? Do you think it's kind of having your cake and I forget the saying, you know what I mean?
Having your I don't know.
And eating it too.
You're just eating someone else's cake.
Yeah, literally. So I was eating my cake. Now can I have your cake without paying for that cake?
Yeah. I mean, the details of execution, I really don't know. So,
yeah.
I mean,
it's clever. Like, is it?
Yeah.
You got to it's come out as goes against, I'm sure, what is considered normal for all your time in the finance world.
Totally.
Yeah, I mean, and because some of the mark-to-market losses on what some of these well-heeled investors have bought, and then seen the price subsequently roll over. I mean, they're underwater by a lot of money. So how are they going to make that back? What is their strategy there? I mean, I would have thought that they're probably interested in seeing it, the entity being vended into a bigger vehicle and then having a small slice of that. Like, does Gina really want to be, owning and operating a, spodumene mine and possibly a hydroxide facility by herself? I don't think so. I mean, that's tough.
She'll want a partner.
Yeah, she definitely want a partner. And so I think that's what she's trying to talk herself into. I mean, MinRes is an extremely competent company, but even they, looked at the hydroxide side and thought, not sure about this. We probably need a partner. And so they went and joined hands with Albemarle. And I mean, they already, they've got established expertise and contacts in the industry. So I think they probably want to just vend those or sort of feed those resources that they've put their foot on into their own plants. But there'll probably be some many discussions had on which way is that feed going to go and who gets what share of the profits. When you've got multiple big fish around on the register, trying to all sort of push their own self-interest.
What about we spoke about Delta yesterday. Like, what are your thoughts on that? They had 60 million already. They're raising another 70 at a further discount, 50% down from when MinRes bought in.
Underwritten by MinRes, top-up facility that lets Gina buy.
Pretty much every stage of that raise was
Insto's
favouring
settlement
MinRes
before
in some
the
way.
AGM, which, hello, might give outsized weight to MinRes and Gina to ensure the resolutions to get two people to the board pass.
Yeah. I'd love to be a fly on the wall when Chris and Dave Flanagan were having a chat about which way things were going to go here. But
you and I both, mate.
Probably MinRes has probably got effective control of that now. I think that because of this M&A euphoria in the space, the equity markets or the share market was there for a raising of that size. I mean, keep in mind, all of this is happening in the context of a spodumene price which has fallen 50% in the last 6 months.
75% in a year.
Yeah. I mean, normally...
To be fair, they were at stupid, ridiculous highs.
100%, yeah.
The demand for the raise didn't have to be there because it was underwritten by MinRes.
Oh, yeah, that's true, but I don't know if they got hit for all of it. I mean, maybe the broker wants their sub underwriting, and they probably would have shown the book into Min and said, "Oh, we'll sub underwrite the."
Well, that was the interesting thing, right? It wasn't underwritten by the broker. It literally there was no sub underwriting where it literally just said underwritten by MinRes, not underwritten by the joint lead managers. The JLMs didn't even get an underwriting fee. They got 3.5 total, but that was on the placement and stuff. But it was MinRes in their outright capacity as underwriter.
Oh, but generally speaking, the brokers they might underwrite the whole lot, but they don't have the balance sheet to take that if they get hit. So
Totally.
they'll then pass it on to other people.
Totally, but it's normally the broker who intermediates the underwriting. So the underwriter is Canaccord or whatever, right? In this case, it was Bell Potter and Canaccord. Normally, they're named as the underwriter, and they'll sub-underwrite it to Tribeca, Eagle, whoever.
Yeah.
In this case, none of those parties involved, just MinRes as underwriter.
Well, I suppose from an optics point of view, if they want, if MinRes didn't want to get hit for the whole lot, putting their name to it and saying we're here anyway, it sort of encourages more people to come in.
Yeah.
So maybe they don't end up with as much. But I mean, if they wanted the whole company, they probably could have had it. But perhaps they just want some additional money in there to help drill out the projects that they've got and help that thing through to a point where MinRes can wait and see how big is it going to be and where is it going to end up.
But look at what the action's over. Look at the projects. Mount Ida's it's not a massive project. It's underground. It's got there's possible lepidolite there. It's not a knockout grade. Yinathaura doesn't look like it's going to be that high grade. It's big and very good, but it doesn't look like it's that. But that's what all this hustle and bustle's over. They're not knockout projects at all.
Agreed, but the dollar sums are pretty small as well relative to the size of MinRes. I mean, they were tipping in 15 on a 60 raising. They just raised over 900 US from a bond offering. So,
and I wouldn't count on MinRes being an advocate for the share price of Delta. I mean, they can extract value from those projects via offtake agreements and mining services contracts. And when you have outsized influence, maybe that's actually, the positive NPV for you isn't in the Delta share price kind of mark to market.
No, it's a very good point. And maybe that's what they're thinking of doing.
Yeah. And Sammy, do you think we'll look back in this in 10 years' time and think, well done, Gina, well done, Chris? Or do you think we'll look back at it and be like, what the hell? Are they geniuses or idiots? And I don't know the answer.
Yeah, I mean, where's the lithium price going?
Yeah, good point. I mean, that's the answer. I mean, it depends on what the lithium price does between now and 2030 or whatever. See if they get their money back, by some way, shape, or form. But I think that it's interesting. I would have thought the lithium price should be close to a bottom by now, but what we haven't seen yet is the production cuts from those lepidolite projects up in China, which we've always considered higher cost. It does seem as though some of the owners of those projects have now become vertically integrated with refineries, and so as a sort of all-in-one type proposition, their costs have come down a bit. But we need to see that production start to be cut for a bottom to go into prices. But the other thing that's knocking the lithium price around a bit, I think, is interest rates and specifically the the effect that that's having on both businesses and consumers being willing to spend, $15,000-$20,000 to put a battery in their home or their business to try and mitigate their power price exposure. When money's cheap, you can debt finance these things. It probably makes a bit of sense. But when, all of a sudden you've got to pay 6 or 7% on these projects, and power prices in Europe and the US have come down recently, all of a sudden the argument for stationary storage is not as strong as what it was. And I know most people talk about lithium with EVs in mind, but I think my understanding stationary storage got to circa 8-9% of lithium demand, and was growing at circa 100% year on year for a while there. But just recently it's rolled over pretty hard, and you'd want to see that pick back up again, I think, to get some demand coming into the space.
To finish off on this lithium chat, you know what I'm looking forward to?
Tell me, Matty.
Kathleen Valley starting.
Yeah.
Because all we talk about at the moment is M&A, exploration. I'm looking forward to actually talking about a project in operation, because it's all just
Hypothetical.
speculation based on no
Paper
rocks,
money.
no rocks at the moment. So I'm looking forward to actually seeing that happening.
Yeah.
That's right. I want to circle back to uranium. So you'd spoken before how you're bullish uranium, but I noticed in your latest monthly that you'd actually spun out of Paladin equity and into the SPUT Physical Uranium Trust. So firstly, what does that say about the valuation on equities at the moment? And secondly, what is the proposition or the upside you see for the physical trust?
Yeah, it's a good question. It's nice to know somebody reads my monthlies. But,
Mate, you've got your biggest fan here, mate. You can. Everything you've said will be mentioned.
We'll hold you to it.
So the reason we did that is that, in starting the Strategic Natural Resources Fund, what we wanted to do is try and capture as much alpha or just outperformance as possible without all the volatility. And, resources and energies are cyclical sectors, and they can be very volatile, and investors don't like volatility. I don't like volatility. When you had a shit month in your fund and you're down sort of 10%, it's all you ever think about. Everybody would like things just to go nice and steadily from bottom left to top right. Obviously hard to achieve in practice. So, we did very well out of Paladin. We luckily enough got a bit of a slips catch in there in late May when they had that sort of bit of a kerfuffle around the mining lease in terms in Namibia.
Namibia, yeah.
Yeah, so we picked up our position there, and over the next 5 months it did about, I think, 98% or something to where we eventually sold it. And the reason why we did sell it is because we model all these things, and if you build your Paladin model, you put in your your inputs from the DFS, and then you sort of goal seek the uranium price to work out what MPV, also what uranium price you have to put into to get the share price.
Yeah.
And I was having to get to doing circa $110 a pound.
Yeah.
So if the equity is pricing at 110, whereas the physical is 68, well, we sell the equity and go buy the physical.
Yeah.
So we'd seen equity research reports come out, and they move away from net asset valuation
Because it's trading at 2 times NAV. We can't have a buy on it.
and then they go to the blended 6 times and the blended 8 times, then the blended 10 times production in 10 years' time.
That's just on an EBITDA multiple.
That's just not blended at all.
until it's back at a discount to NAV, and then you're like, oh yeah, 1 times NAV is the target price again.
Yeah, so I'm assuming you are not using any of those lofty multiples 5 years into the future in your analysis.
No, I mean I don't use multiples of NAV or anything like that. I leave my MPV where it is, and just because something's at a premium of NPV doesn't necessarily mean you sell it. But it is, I think it's handy to leave those anchors in there, because if you start adjusting these things, or you go to the like the expiration line of your MPV and start dialing that up a bit, which analysts do from time to time, then you sort
Not
of
a favourite of ours.
Yeah, you can kid yourself that, oh well, hang on, this thing's actually not expensive. So I leave all that stuff as is, and I think what I'd be more inclined to do is, well, hang on, if all these projects are trading on 2 or 3 times MPV, then what's my commodity price forecast? Is that right? Am I too low here? And you might go have another look at that, and then that's where could I be too low? Have I got the demand side of this wrong? Like, what's the market paying for that I'm not seeing? And then you can start to ask yourself those questions, and then you'll get to answers, and the answers. The most important part of the answer is how much conviction do you have in that answer being right, and then your conviction in that answer should then determine how big a position is this in your portfolio. Because if you're like, I might be here, but it's 50-50, well, you probably want to trim some of that position and just sort of de-weight a little bit in case you're wrong.
I remember when we spoke with Guy Keller, and he kind of articulated that the counter to that perspective, because it's like that's the rigorous approach. You do you value, you model it, and you think, geez, this is expensive on a relative basis, buy physical. The counter perspective is that as uranium price goes up, generalists allocate to the equities, and they have a mandate they can only buy in the ASX 200 or whatever the index is, and so they just allocate to the three names in the index, and they're not looking at price to NAV on them. They just it's a flow of capital. Were you thinking of that kind of counter thesis?
Oh yeah, definitely. Yeah. So I mean, and the uranium ETFs have had massive inflows, and they, you look at the top positions of the ETFs. There's Cameco and Paladin, and Boss has done very well out of it as well. You need to be aware of who your co-investors are and how tight or how that money might be. So yeah, that's certainly part of it. But for as Guy pointed out, I think in that talk, that because of that, these ETFs, but also things like the SPUT physical ETF, which is probably going to continue to receive inflows, I think, over time. You've got this sort of positive feedback loop, which could go on for a while, pushing the price higher and higher. Eventually that bubble will burst, but it could, the bubble could rise a lot higher than where it is now before we see the end of the cycle.
Yeah, bit of finance 101 from you boys, because there's going to be bloody dumbass miners like me listening.
You should direct the question
Sammy
to the
This is going both ways. How does the MP fee of the projects, does that go into the NAV calculation, the sum of the parts? Is that if you've got one project, is the NAV the MPV?
Net cash position too.
Yeah,
factor in
pretty much. So you've got your discounted cash flow of the project. So that's one line. Then you have your net debt or net cash. That'd be part of it. And then I always put in something for corporate costs, because that sits.
They don't fully include that in the MPV.
Never.
Yeah. And then you might have something in there for exploration, but that. I don't like paying for exploration. I can get quite excited about it from time to time, but I don't like paying for it, because I've back as a geo, I've drilled plenty of holes and hit not much. So even the best, like the thing that you might think is an absolute sure thing, it might come up as a duster or whatever, or hit nothing. So that you might have that as part of your NAV, but not much. You just got to be very careful about how much you're paying for there.
So when you say the exploration, the cost of it or the potential value of finding something?
The upside.
Yeah, the upside. Yeah, righto.
Yeah.
The option value.
Mate, just flick us that spreadsheet afterwards so I can figure out all these formulas. I'll do a bloody, what are those books? Yeah. Mining Finance for Dummies. Maybe I'll be the author of that.
We've got one on the shelf somewhere here.
Oh, beauty.
I was going to ask you if you guys had read all of those.
I think the most of them, yeah.
I've got to chuck a couple of Playboys up there.
Sammy, I want to touch on another commodity we haven't spoken about today, copper. So holding you to more of the words you've written, Metals Acquisition Corp was a company you're following. And as a catalyst, you spoke of the potential or rumoured listing on the ASX that's meant to happen, was meant to happen around about now, supposedly going to happen Q1 of next year. I'm interested just to hear how you think of the catalyst being a listing on the exchange here.
That just, I think, comes down to the valuation differential between the US market and the Australian market. So down here in Australia, the only big liquid copper producer you've got is Sandfire, and because you've got a lot of money trying to get copper exposure, I think what happens is the multiple that Sandfire trades on gets pushed up, I think higher than where it otherwise might be if there was a spectrum of investment opportunities to choose from. And McMullen, the MD, is based in Australia. Nev Power is based in Australia, the chairman. I think Bill Beament was on the board, but he's stepped off now.
He's an advisor, technical advisor.
Yeah, so I mean, it deserves to be. It should be listed in Australia, and that was certainly part of the strategy long term. And my understanding, it's just taken a little bit longer to get some of the accounts audited, etc., and get the ducks in the row to facilitate that listing, which is probably an after Christmas type story now. But I'm sure it'll make its way down there, and that'll be judged on its merits.
Well, but how do you look at investing in copper? Do you? It's not like you don't have to invest in Australian copper, do you? Because you look at like that let's just use that Cobar area as an example. Like CSA is, very high grade but very deep, and then surrounding stuff like Triton is not a outperformer for Aeris, and like that. If trying to bundle up a heap of assets that are either very old or not really that high grade, is it like, well, it's a lot of risk just to invest in Australia because you think you want to invest in Australia?
Oh no, you're dead right, and it's at what price? That are you being exposed to that risk? And I mean, we had had a bit of Aeris and it hasn't worked out well, and a lot of these mid cap copper and base metal producers have really struggled for a variety of reasons, but in Metal Acquisition Corp's case, I mean, their deposit is very high grade. You're sort of looking at high 3s, low 4% copper. I mean, it's very similar to De Grosser when that was running. So they will be fine, I think, from a margin point of view. If they're not
even at 1,800 metres or whatever it is, you still the grade offsets it.
Yeah,
when you got twice the grade of everyone else.
Yeah, and I think that through Glencore's ownership of that, they didn't do a huge amount of drilling laterally. So I think the new owners have found some pretty decent hits, sort of adjacent but higher up. So there is some low hanging fruit there, and I don't think they've released I'm pretty sure they haven't released their quarterly yet. But the other is going to be very interesting just to have a look at what they do on the cost front, because apparently all the there was a lot of I suppose lazy sort of cost management policies in place under Glencore.
Oh, and they don't really do much exploration. They find the world class bit, take that, flock it off.
And
they're not looking for the low hanging fruit, you'd say.
No. Whereas it's their sole asset for these guys, so I think they'll be hard at it. And I mean, all the sort of the caliber of executives you've got in this company is top notch, and they have a precedent of success. So, they've got a lot of money, but a lot of reputational risk attached to this as well. So I've got no doubt in my mind they'll be going hard.
I wish them all the best for exploration, but it just seems copper in Australia repeats aren't common. Like, look at the amount of holes that Sam fired peppered throughout that Dalgarang, I think not Dangarang, De Grosser, I forget what the region was, that whole area, that they peppered that. They found Monty, which was 1 million tonne, but other than that, like, it's not like, we found this beautiful ore body, let's find the repeat of it. There doesn't seem to be many repeats.
No, that's true. That's true. But certainly, I mean, Samphire drilled a lot of holes and struggled there a little bit. But I mean, and then on the other hand, I mean, Oz Minerals, went and found Carapatina. Well, I suppose they acquired Carapatina. I'm pretty sure they did.
I got no idea.
And then there was one just next to it called Fremantle Doctor or something like that. So I mean, and then BHP found an absolutely ripper thing down the road from an Olympic Dam. That's the one.
Yeah, no, Oak Dam. I think they call it.
Has some cracking hits, but it's in BHP, so we don't hear about it.
Well, they put out an announcement just on the bloody exploration results of that thing, and for BHP to put out exploration results, it's good.
IGL are doing the same these days. Sign of the times.
Maybe for different rationales.
There was another one we spoke about 6 or so months ago. And since then, they've had the DFS come out. We got into it a fair bit. It's De Grey. So, first of all, there was certain aspects, the CapEx lift, the OpEx staying relatively the same. First question is, what were your sort of thoughts when the DFS came out?
I've been a little bit wary on the CapEx number from the get go. I mean, now
it's underdone.
Yeah, I suspect it probably is. I mean, it's very hard. I mean, you've got to have a bit of sympathy for these management teams here when prices are moving around as fast as what they are, and also wage costs as well, which does make it very difficult to estimate. But it's not a straightforward ore body. I mean, it's just not a stock standard CIL. It's a little bit more complex than that. So, they've got the contingency in place, so hopefully it doesn't go over too much. But I mean, it's anybody that builds a new project these days, it's sort of a given almost that it'll slip a little bit.
What's the end game there? I mean, like that presentation they put out with the DFS, they're talking about like royalty finance. Like, if end game there is like get acquired by, an established player, why the hell are you putting in your presentation royalty finance?
I just think they're desperate to talk down the ongoing equity requirement. So the last raise they did, what was it, about $1.05? Yeah. They didn't fully fund them through to production. They need a lot of debt and some other solutions there. they from self-interest point of view, they'd want to talk down the equity component that might be required there just to try and remove that headwind from the share price. But the market's always is generally pessimistic on those sorts of front. They'll probably assume that there will need to be a little bit of equity at some point. But certainly if they did put a royalty over it, it would diminish the appeal. It's only a couple of percent, like it's small, but to a potential acquirer, I think they'd prefer to have it clean. I'm actually surprised that it hasn't gone yet, that somebody hasn't lobbed a bid for it. But
who do you think the logical players are?
It's $2 billion market cap. It's a pretty big bite. $2
billion, then you got to pay another $2 billion to build it.
Yeah, well, hopefully it's not a $2 billion capex figure, but
I don't know, with 800,000 tonne box train.
And in there might be the explanation on why no one's bid for it yet.
Yeah, I'm not sure. But I think it's become a little bit too big for Gold Road. So that has to be somebody else. I mean, there were all sorts of rumours that Barrick and others were sniffing around, but nothing's transpired. You never know whether there's any substance to these rumours or not. But
don't let that get in the road of a good story, Sammy.
Yeah,
what about like Newmont and Goldfields?
Yeah, that's possible. And who knows? Maybe the strategy is to watch them get this thing into production, and if they do struggle with ramping up a POX plant, which is quite possible, then maybe that's when somebody might come in and as the second or third owner and try and make some more money out of it. But it's trying to second guess M&A is always tough.
With the allocation to the green and the gold, like which part of the gold market are you most drawn to at the moment? Is it the undeveloped kind of ounces that can't catch a bid forever because you expect them to eventually rip as gold price rips, or are you actually looking for the cash flow producing?
Probably more leaning towards the cash flow side of things. It depends what fund. Like I wear a couple of different hats. Yeah. Certainly in the strategic natural resources, we're probably more sticking with the producers. But happy to mention, we're regular frequent shareholders of Capricorn, depending on where the price is going. Ramelius, I think, is looked like they've got an outlook of declining costs and increasing margins, I think, over time. Got a lot of time for the management team there. I'll be interested to see who the new CFO is, though, by the way. Yeah. But then we might look at some of these turnaround stories like a sort of an Ora Banda or somebody like that, which has done pretty well recently. And Luke Cray, who was a shining light within the Northern Star team, has come out of there and is running his own company now.
I don't understand Ora Banda. Please explain it to me. Like they've made a lot of money out of equity raisings and selling parts of their tenements, but they consistently got an all-in sustaining cost of $29,300.
Sammy's been a shareholder for a long time.
Please explain it to me. Is it all in the management premium? They're running at a loss.
I think it's what's expected to come next. So, you're dead right. Like the history of this project is woeful. You go all the way back to, I think, Monarch Gold had it with Michael Keenan, and I think apparently he didn't do any grade control and was just shoving waste through the mill. That didn't work and they went broke. Then I think Mike Photius at Eastern Goldfields got hold of it. Yeah. Tried to go into production too fast. I think he didn't have enough mine life, ran out of cash, went broke. Through the administrative process, came out of that, had I think another MD, his name escapes me now, which...
There's David Quinn-Livin, and then there was Peter Nicholson as well.
Yeah. No, I think and they had a tough time of it. But I think, Quinn-Livin should have known better. He's been in the industry a long time. Peter Nicholson, he's a finance guy like me. He was with RCF for a long time. It's, you wouldn't, I'm investing in these mines all the time. But I'd never kid myself that I could actually run one. You need to know where
I'm in that camp too.
You need to know where your boundaries are. But I reckon Luke Cray is the guy.
Oh yeah, got no question on the right man for the job. But why is the mill on?
I think when Luke Cray took over. It was going to cost them a lot of money to shut it down, or they thought they'd just be able to scrape through. And so, you'd know better than most. Like, if you want to turn or change a mining plan, like it takes ages for that to eventually appear in a lower cash cost. So, Luke's been had his feet under the desk for about 12 months now. They had a bit of waste stripping they had to finish off in some of their pits, but that stripping ratio is now guided to come down quite materially. So I think it was about 8-1 in the open pits last quarter. I think it's meant to be coming down to circa 5-1 in the current quarter. So immediately, I think that's about $10 million worth of open pit mining that shouldn't be there in the current quarter. We'll find out whether or not in January when they release their quarterly. But then on top of that, because they've got quite a small mill there, they need to have high grade going through it. And, Luke's a fantastic underground miner. They're developing that Riverina underground. That higher grade feed will come in and start to displace some of the lower grade open pit feed and increase that throughput through the mill. So that means your production goes up. Your unit cost should start to come down because it's largely fixed. And then after that, you should have a little bit of breathing space to start to get into the exploration, which again, I don't think you're paying for. I reckon, the base business is probably worth, circa 20-25 cents a share or thereabouts. But then you start to get into that 1,000 square Ks or 1,100 square Ks of tenure, which is littered with gold. It's not greenfields type stuff. There's drill holes all over the place. There.
So that exploration, that's worth real money. I mean, it must have been kind of a crappy experience as a shareholder to watch parts of the farm kind of be sold down and then worth a bit kind of in hindsight as time's gone on too.
Yeah, that's fair. But I mean, you look at it on a per share basis. I mean, you either get diluted to all of it if they need to raise more equity, or you miss some of it if they just sell off a little bit. But I mean, on that exploration, potential, it's not just the gold. I mean, we just saw Wesfarmers come in and pay, was it $26 million for the lithium rights there. So I think the question mark around this company is whether they had enough cash to see them through as you go through this turnaround period, and it's always tight. And as an investor, it is a bit of a nerve-wracking experience. But after that injection of cash, upon completion, they had pro forma cash of maybe $52 million, I think, and about $10 million of debt. So all of a sudden, they've got plenty of working capital. Costs should be coming down, and they've got a pile of cash there to go look at that exploration.
It looks like they've done a good job of stripping out everything they can and sold off. Like since Luke's been on, there's been numerous corporate transactions of selling the lithium rights. There was a few others. Lady Ida. But are you confident they've adequately drilled? Because all the, as you said, previous failures have been, it's the grade reconciling coming out of the what's in the model versus what's actually goes through the mill. It's narrow vein. Have they adequately drilled it enough to give some confidence that it's going to reconcile when it goes through the mill?
Yeah, I think so. I mean, last quarter, the reconciliation versus the reserve was pretty tight. I mean, it's only a quarter's worth, but I think after they had those reconciliation issues, they went and recut the reserve and downgraded it. But that's the base that we're working off now. And then moving forward, our underground feed should be an increasing proportion of the feed into that mill, and all that happens under Luke's tenure. So I mean, he watches this stuff like a hawk. Despite the fact he is an engineer, he knows his geology, that's for sure. So it's his name on the top of it as managing director now. So if there is a shortfall, it's going to be on him.
Yeah, mate, and look, best of luck, because if you can be a success at a historically failed project, mate, hats off, I reckon.
And just to keep yourself honest to that thesis, how do you, going forward over the next quarters, how many more chances do they get? When do you have to see, and by how much does all-in sustaining cost have to come down before you become a disgruntled shareholder?
It's a good question.
I think a 2 in front of it at least.
Oh yeah.
At least.
Definitely. So I think the last quarter their all-in sustaining was about 2,950 thereabouts. So I mean, I'd like to see that down at 2,500 for the current quarter, and I think working back through the numbers I've mentioned already, I think that should be readily achievable. If it doesn't happen, well, you want to know why, and then how disgruntled you get will depend on that answer. But if they can get down to that, sort of level, and that's optically a $500 an ounce margin that they then have. Hopefully, as the higher grade underground feed comes into the operation, then those costs should continue to come down, and we judge each data point that comes in from thereafter on its merits. But
do you think they're going to come into the M&A play around because they're a bit west of Leonora, like, so there's sort of the closest thing to that Menzies area. Then you've got, you know, a bit north, you've got Mount Ida north of it. Like, do you think they're going to come into play within M&A at all?
Oh, not anytime soon, because Hawke's Point's still got 42%, I think, of the stock there. So, I mean, they didn't want to be 42%, and I was involved through the administration process.
They bought the debt from Investec when things were dire, right?
Yeah, well, there was no other bidders. Yeah. You know, they were looking around like this stock was absolutely friendless, and they were the only people there. So, you know, they ended up with more of it than they really wanted. But now that they've got it, and it seems to be, working, they'll hold on for a while. I mean, they were big investors in Capricorn, and they held on to that stock for a long time before letting any go. So I imagine they'll do the same thing here.
And on the tangent that Matty just touched on, when we last spoke, we spoke a lot about the saga of Gwalia, and you're still a holder in Genesis.
Yep.
So I just want to flesh out the thesis there. They've got this 300,000 ounces per annum gold. They don't have a timeline to that. They're getting their hands on Dacian, slow and steady now. How does that all come together, and where's the value uplift? They've got that, management premium that is well noted and well deserved for people like Riley, people like Mark Clark. But where does the story sort of go to from here? What gets you excited?
I think the beginning of the 5-year plan, I think, is what I'll be most interested in. So in the last quarterly, those guys mined 900,000 tonnes of ore out of Admiral. And this is compared to like the Gwalia mill's only got a throughput of about 1.4 million tonnes per annum. So already they seem to be producing, like optically, a lot more ore than they need to fill that mill. And I suspect they're probably going to fill that mill faster than what the market expects. But we'll find this out with their 5-year plan.
I think they were still about 400 short last quarter, I think.
Yeah.
But obviously there's that lag on what's coming from Admiral.
Yeah. Saracen way was always set expectations here and exceed. So I think you're right in that strategy.
Yeah, Troy Irvin, I should give him credit here. I reckon he runs his guidance about 6 months behind where the operation is. He does it very well. But I think that's, filling the mill is it, and that's what they've said. I think it'll happen a little bit faster, and I think perhaps to a greater extent. So, I mean, I don't know how much it costs to increase the capacity of that mill from your 1.4 to 2 million tonnes per annum.
I think it can get. I think I read you can get up to about. Well, talking about me, I think it's like 1.7, 1.8 if you got a lot of open pit, like a lot of oxide. Like just you can increase the throughput with the crushability. I think I think it's like it was 1.2, 1.3 for very hard, and then there's that other end of the scale. So if they're chucking more open pit material through it, crushability will lift the throughput.
Yeah, no, I think that was.
Don't hold me to that, Ral. not that you're responding to me messages anyway, so I don't care.
Yeah, we'll have him on one day.
They've obviously simplified Gwalia, but because they're all in sustaining come down significantly compared to what St Barbara were producing at. So it looks like they've gone in there, they've pinched a bit of management from other companies, and they've simplified, and they look like they're actually going to possibly make Gwalia not as bad as it was, and actually they might even make a little bit of cash on it.
Yeah, I mean,
because it's still 5 gram dirt.
Yeah, well, that's exactly right. I was just going to say, like the raw sort of potential there in terms of the grade, like it should be doing okay. So I'd love to get a breakdown of where all these costs were going, but it can happen. But I think somebody like Rayleigh is he would have been down the hole and looking around and sort of going through.
He's open pit. He's got the underground experts down there.
You reckon he gets claustrophobic?
Yeah, no, but from what I understand, there's a lot of the Gwalia ore body. There's a lot of things that you need stringent rules that you need to follow to make sure you mine that ore body correctly with the stress and the backfill and everything like that. It has to be, and you stop following those rules, things go to shit. And a lot of it's like, because it's a 40-degree ore body, like pulling the footwall correctly, like the drill and blast, and a lot of things, everything has to go right. And it sounded like a lot of those things, historical rules sort of fell by the wayside over time, which can happen in a technical department if they're not enforced properly. And it sounds like they've got ex-Gwalia personnel from that early area that know what those rules are. They're working there now and reinforcing that.
Yeah.
I think if that and just looking at that last quarter's performance is probably an indication that it's been steered the right way. That's where a management premium comes in because that shit starts happening.
Well, yeah, I mean, you'd probably patch up the relationship with the contractor there. I think McMahon's are still on site doing the underground, and I think I remember when I've forgotten his name, the previous MD that was in charge there. They got McMahon's had been on site for all of about 2 weeks, and they got blamed for the downgrade in the quarter or something like that.
No, you did the
Yeah,
announcement.
but typically, like St. Barb's had the Burncut had been there for ages, and they're like switching contractors. I'm like, well, Burncut's the most sophisticated and manned up contractor that you can get. So I don't know, stupid of a company to think, oh, we'll get someone cheaper and they can do a better job than you. So
But why is it the second most short stock on the ASX? Do you know?
I think it's a really good question, and I've been scratching my head about that for a best part of a month now. My understanding is that there's it's to do with speculation that there's going to be a bid for Red 5, and so with a positive outlook for gold price and obviously having the quarter that they had, so things look like they're working well. I wouldn't want to be short the stock, and I think the only way that short sits there is if you've got a long on the other side with Red 5 to try and hedge out that gold price exposure. At a guess, I think that's probably a chunk of it. But then, there was that big wedge of short interest that sort of came in just after the index inclusion. But then it's kept on crawling up higher than that. So
I thought it was betting on a mean reversion after the index buy. But yeah, you're right. It's stayed higher. It's I haven't had someone break it down in sort of a thesis where I can understand.
No. So I mean, other than somebody thinking they're going to bid for Red, which I think is unlikely. I had heard another explanation in that somebody has used their stock as collateral for a loan someplace else, and so they had to hedge out the movement of that stock to borrow against it. That's one story I've been told. I don't know if it's true or not, but maybe that might be part of it. But in any which case, I mean, it's I'm happy to take the other side of that trade. I think at the moment.
Interesting. Well, are you guys keen to do a bit of a segment that will lead into underrated, overrated? This is because I think we do underrated, overrated for the first time ever with you, Sam. I think, and we critiqued you for not being concise with the one word.
Should I get before you start that? Should I get Sammy to bloody see if he validates my bloody 2-month prediction down there, or tell me if I'm a dumbass or not?
Sure,
about
mate.
the Leonora saga.
What's the prediction there?
Well, we're on Tuesday's episode. This one's out. This is Thursday today.
Well, it's a 2-parter. This could be Friday.
This could be anyway. My thoughts were based on a bit of a Canaccord note and the general feel about the Red 5 Silver Lake side of things. Mm-hmm. It looks like Red 5's got twice the EV of Silver Lake, but they've got balanced pressure. But Silver Lake have got shitloads of cash. Mm-hmm. Is that a logical merger now that Genesis seem to have a base case scenario where they don't need the Red 5 mil?
I think there's probably merit to that. I mean, Silver Lake's got some mine life issues as well. Like they've things haven't gone well for them in the US, and so I mean a bit of a tie up between those two could make a bit of sense. Whether or not it goes ahead probably depends on the performance of Kick of the Hills. So if they if things go okay there and they can earn themselves out of the debt situation that they're in, then Silver Lake are going to have to chase. It's probably going to be tough for them. But
it's trying to make the merger accretive
for
I guess for Silver Lake shareholders.
I mean, it probably, I think if they've already got a position there, then it probably does help in that regard. But
Silver Lake's problem is they don't have a growth story. Like unless you're in, you buy a Sugar Zone and you kind of you believe that can be turned around, but they don't have a growth story outside of that.
Yeah, but then again, a lot of mines have been running on 2-year mine lives forever. So there's they might be one of those companies that just keeps going and going. Off the smell of an oily rag.
But I suppose it just reminds me a little bit of a situation where if you've got a declining mine life across your asset base, and you don't have an easy solution yourself, like you're not confident that the exploration is going to continue to extend like some of these big these undergrounds do, That's sort of the situation that Independence, or it was called Independence Group, now IGO, was in before they bought Sirius. And those nickel mines that they had long was getting
Jaguar was one of them too.
Yeah, I think so.
Yeah,
they were had pretty short mine lives, and so I think at the time they were around $4 a share. And my NPV, because my mines were coming to an end, and I wasn't paying for more of them. But like on an earnings multiple basis, they look fine. But on an NPV basis, they look pretty expensive. And I think Peter Bradford knew that. And so he bid for Sirius, and then he got all sorts of grief saying he paid too much for it. It's like, well, I think he was using overpriced script. So in actual fact, I think Peter probably did a pretty decent deal, and it turned out to be a pretty good deal in the fullness of time anyway.
Yeah.
Right, rip it.
Yeah. All right. So these are one sentence answers. I only got 2 questions, but it's just to get you primed to be concise, Sammy. So the only rule for this brief round is answer a complicated question in just 1 sentence, right? Mm-hmm. Number 1, why does Pilbara have 20% short interest?
I think the markets out there thinks lithium price is continuing to fall, and they're probably the market's thinking they're going to buy something.
Ooh.
Number 2, what is Silver Lake trying to achieve by buying 10% of Red 5?
I think they want an insurance policy just in case, Sugar Zone and their other mines, start running short of mine life. They need a place to go.
Oh, fuck, he's
well done, mate. You're bloody on the money today.
Right, keep it going. I'm
Alrighty.
loving this energy.
Underrated, overrated now. 1 word answers. Okay.
Oh, Jesus Christ. I like how you bloody went sentence to 1 word. Yeah, transition.
Breaking it down. Okay, first up, Chris Ellison and Gina Reinhart teaming up.
What, sitting in a tree?
Well, that's a short.
I'd say, as in the likelihood that it's going to happen?
Yeah.
Nah, overrated. The fish are too big there.
Whitehaven Coal's purchase of Blackwater and Dornier.
Underrated. Bringing new met coal in is near on impossible. So you've got to buy existing production. It's very hard to bring on new supply. So those projects would be worth a lot in fullness of time, I think.
Cobalt as a commodity.
Overrated.
That cheek lift was an overrated straighter.
It's hard investing in commodities which are byproducts because the prices can stay very low or very high for fullness of time. Like it's tough. It's tough.
Undeveloped hard rock lithium deposits in WA.
Good question. I got to say overrated because of the run they've had.
Mining services as a sector.
Underrated. They need to stop growing. Like these things are trading at discounts to their replacement cost. Like they're good businesses. They're critical to an industry. They probably deserve a higher return than what they're getting, and it'll come. I just don't know when.
Yeah, the clients that engage them are probably getting a good deal. That's why, because the contractors are not making anything.
Yeah, exactly.
IGO today.
I have to say overrated, I think. I mean, nickel price is looking pretty crook.
It's a lithium business now.
Yeah.
For Greenbushes business.
Well, this is true.
But like a non-controlling interest. It's a financial vehicle to have exposure to Greenbushes.
and nickel exploration.
Yeah. When you're starting to it sounds like they're going to be stockpiling spodumene down at Greenbushes this quarter. It puts a big question mark over the pricing mechanism that they've got down there and what sort of risks sit around that and what multiple are you prepared to pay for it. So yeah, they've got some questions to answer.
Kathleen Valley.
I'm not familiar with it overly. It's been out of the market for so long. I'll probably say underrated then. I reckon that's probably. I don't think Wesfarmers shareholders probably appreciate what that project could do, assuming lithium prices sort of stabilise and maybe even pick up a bit.
Liontown shareholders.
Sorry,
you interpreted Mount Holland.
I'm thinking Mount Holland. Not Kathleen Valley.
Kathleen Valley.
I think it's probably possibly overrated, which I might upset a few people in saying that, but I'm just sceptical.
I agree.
that mining lithium from underground is a long-term profitable proposition, and maybe we'll be proven wrong in the fullness of time. But I reckon it's going to be tough, real tough.
I don't know if I agree with too concerned about the underground, but I just think there's a lot more dosh to be put into that.
Yeah, no, maybe
Get
so.
4 million out.
Centaurus Metals.
Probably underrated. That's a that nickel, the one with the nickel project up in Brazil.
Yeah.
Yeah, it looks like a fantastic discovery. Nickel's out of favour. I think it's it'll do well in a different market.
The calibre of board directors in our industry.
Oh, good question. To answer the question, I need to assume what people think of them. I think I'll say underrated. I'll be kind. I mean, there are some excellent ones, and I think, as I said, like running mining businesses is tough, and there's a lot of executive teams out there which I think are quite good, but they struggle against some pretty, horrific headwinds in terms of sort of staff volatility of staff, sort of moving on and retention and things like that. They've got commodity prices which go up and down. They've got cost lines that go up and down pretty dramatically. It's a tough business. It's a tough business.
The problem with keeping you to one word is I'm interested in hearing.
Yeah, I'm loving it. I'm actually loving the explanation. So we'll just Sammy's got his own rules.
Keep
That's all right.
Another one I'm interested to hear your thoughts on. Is it underrated or overrated, the impact that laterite Indonesian nickel projects will have on the nickel cost curve?
Oh, I think it's underrated. Like, there's so much supply coming up there, and I mean, nickel price has already fallen a bit, but they've reset the cost curve lower, and it's until those guys start losing money and pulling back on the growth, it's going to be tough. I think nickel could be in the doldrums for a little while.
Alpha from shareholder activism in this current environment?
I think it's underrated. I think that there should be more shareholder activism around. I think it's...
you're me, mate. We can have a chat after.
Yeah, I think it's... I think it's a good thing when investors are there to keep directors and boards honest, because some of them, do stray off on a path which may not be in the interest of their shareholders.
You
go.
This one's a one or the other, because I know you're active on both, but Twitter or LinkedIn?
Probably
X.
Probably LinkedIn, I think.
Yeah.
I mean, there's good articles on both, but probably just, there is also a lot of rubbish on Twitter, but some of the articles from experts in their field that I've read as a result of flicking through LinkedIn, I think I find quite valuable.
In situ recovery for uranium.
As in where it's under overrated. I'd be difficult to be overrated, I think. I mean, it's a big part of global supply, so I'd have to say underrated.
The potential of DLE, direct lithium extraction tech, impacting lithium in the medium term.
Overrated. I mean, who knows what'll happen, but at the moment, it seems tough to me.
Vanadium.
Probably overrated, I'd say. I mean, you keep on hearing things about these vanadium flow batteries, but they, I think they're still expensive. They haven't really cracked that cost threshold yet. They don't catch on fire, which is a good thing, and there's something to be said for that for sure. But I don't think we're there yet, and happy to be. I must admit, I'm not close to the space though.
I'm all out, gents.
Investing in Africa today.
Oh, good question. Probably underrated, I'd say, and I'd say that in the context of we don't do a lot in Africa, but the multiples that those stocks
right off.
It'd be hard pressed to be overrated.
Yeah, yeah. I mean,
unless assets start getting expropriated left, right, centre.
Well, you say that, but you think they can lift royalties, not necessarily in gold, but certainly in other commodities in Australia as well, and things get renegotiated. But yeah, some of the multiples that the likes of Perseus and WAF. Good day to Richard Hyde if he's watching this. Did a fantastic job getting those projects up and running and producing decent cash, but trade on a pittance compared to their Australian peers.
Money of mine.
Underrated. You guys the tops.
Beautiful. That's a good play. Should we say?
Love it.
Australian Financial Review. No. Right, mate. Bloody ripper. That'll be
Awesome.
a two-parter for sure, eh?
Yeah.
Absolutely. Appreciate you
sensational.
coming down and having a chat, Sammy.
No, more than a pleasure, guys.
Does
And-
anyone else facilitate you to just come and just do this? Like to just
shit.
talk mining and bloody pick your brain?
Oh no! I tell you what, it is an absolute pleasure being here because I try and speak when I'm at home, and and no one gives a shit what I say.
She's like, how about you? Okay, is the fund up or down?
Yeah, exactly right. I don't even get asked that. So it's talking your industry that I've worked in and invest in is fantastic. So I really appreciate it, guys. Thanks
It's
very
a
much.
relatable thing.
We're
to all of us.
happy. We're happy to help because we need to do it. Because we've got to put a bloody show out each day. So sensational,
Awesome.
lads. Thanks all the bloody all the partners, mate. We've got partners these days. So we've come a long way since we
Yeah,
first.
look at you guys go.
That's what's powering that light there. So maybe we need an SMR to bloody do the office.
I can rattle off the partners, Matty, because I know you don't have it in front of you and we've got too many to remember now. DSI Underground, Terra Capital, McMahon Mining Title Services, Future Proof Consulting, Anytime Exploration Services, KCA Site Services, JP Search, Brooks Airways, and K-Drill.
That's a sponsorship prezzo with no full stops. That was good.
Thank you,
That
mate.
was very flow.
Seamless.
Awesome.
Righto. Cheers,
Cheers, guys.
Money Miners. Hooroo. Thanks, Sammy.
Thank you very much.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.